We obviously expect a couple big impacts from interest rates being cut in housing markets. The first is on home prices. Obviously, as rates fall, mortgage rates fall as well. That boosts borrowing capacities and therefore what people are prepared to pay, and that tends to see home prices increase. Now, we are seeing that to some extent in Sydney and Melbourne, particularly Melbourne, where home prices have been growing this year in contrast to what we've been seeing for the past few years. But it'd be fair to say price growth hasn't been particularly quick so far this year. The other big effect we'd expect to see outside of home prices is in the new builds market. Housing construction's particularly interest rate sensitive, and there too, things are still fairly sluggish, though they have picked up from where they were a couple years ago, though it is still early days given that we've only recently started to see interest rates falling. We are heading into a typically quieter part of the year in general for housing markets. Things tend to quiet off post-Easter, but if we're looking in the pre-Easter period, over the first few months of the year, it was actually reasonably solid in terms of the activity, particularly in Sydney and Melbourne. Number of new properties hitting market, auction volumes were still pretty high, but things are starting to quiet off now. We may start to see that pick up again as we see more rate cuts this year, and given that we're now expecting to see quite a few rate cuts this year, given changes globally, that could start to see a bit of a change in housing markets.